Right. Welcome back, everybody, to another deep dive. Today, we're tackling a pretty critical part of Forex trading, and I gotta be honest, sometimes it makes me feel like I'm tangling with a couple of Wolverines. We're talking about margin and leverage.
Oh, yeah. Two concepts that can seem a little intimidating at first.
Intimidating, that's putting it mildly. But you know what? By the time we're done with this deep dive, we're gonna have you wrestling those Wolverines.
Okay.
Metaphorically speaking, of course.
Always a good idea to avoid wrestling actual wolverines.
Oh, exactly. So no actual Wolverines will be harmed during this deep dive, but seriously, folks, we're going to break down these concepts in a way that even if you're new to Forex, you'll walk away feeling like you can handle this. You know, I'm the first to admit when financial jargon has me seeing stars, and these two terms, margin and leverage, they definitely fall into that category for me. So luckily, we've got our Forex expert here to guide us through this. So what's the deal with margin and leverage? Are they like the secret code words to get into the Forex club?
You could say they're more like the power couple of Forex, always working hand in hand. They're two sides of the same coin, really.
Okay, I'm intrigued now, but I still need a little help wrapping my head around it.
All right, picture a seesaw.
A seesaw. Okay, now I'm picturing myself getting launched into the air.
Well, hopefully not launched into the air. But the seesaw analogy works because when one side goes up, the other goes down, right?
Right.
So with margin and leverage, it's like this. Margin is the amount of money you put up front to open a trade, like a good faith deposit. And leverage, well, that's what gives you the power to control a much larger position in the market than your margin alone would allow. It's like a force multiplier for your trading capital.
Okay, hold on a second. You're telling me I can control, say, a lot of currency, even if I don't have mountains of cash just sitting in my account?
You got it. That's the beauty of leverage. It lets you amplify your buying power. It's expressed as a ratio, like 50.1 or 100.1, showing you how much you can magnify your initial investment.
Wait, so let me get this straight. If
Yeah.
I have a 100.1 leverage ratio, I could potentially be controlling $100,000 worth of currency with just $1,000 of my own money. Is that even legal?
Perfectly legal. And you're right on the money with that calculation. Our source material from Baby Pips has a great example of this using the USD/JPY pair. Normally, to trade a standard lot of that pair, you'd need a cool $100,000 without margin. But with a 1% margin requirement, which gives you that 100.1 leverage, you're in the game with just $1,000.
Okay, see, this is why I love these deep dives. My mind is officially blown. But I gotta ask, there's gotta be a catch, right? I mean, it can't be all sunshine and rainbows with leverage, can it?
You're a quick study. You're right to be cautious. Leverage can be a powerful tool, but it's a double-edged sword. Remember, what can lift you up can also bring you down.
Okay, yeah, that makes sense. I'm getting a little bit of a proceed with caution vibe here.
That's always a good instinct to have in Forex.
So before I get too carried away with the possibilities here, let's talk about how leverage is actually calculated. Is there like a secret formula only Wall Street mathematicians know, or what?
Nothing that complicated, thankfully. Our Baby Pips friends lay it out nice and simple. The formula is just leverage equals 1 divided by the margin requirement.
Okay, that sounds manageable.
Right. So if a broker says we require a 2% margin, you just do a quick calculation and boom, you've got a 50.1 leverage ratio.
50.1 leverage for a 2% margin requirement.
Got it.
They even have this handy-dandy table in the article showing different margin percentages and their corresponding leverage ratios, which is awesome because let's be real, I'm much better at reading tables than I am at doing fractions.
Hey, we work with what we've got.
Exactly. Okay, so lower margin equals higher leverage, that much I'm getting. But what about this whole required margin thing? Is that different from just plain old margin?
It is a little
Okay.
different. Think of the margin requirement like the speed limit, right?
Yeah.
It's a percentage set by the broker. The required margin is the actual dollar amount you need to have in your account to hit the gas and open that specific trade you're eyeing.
So let's say I'm feeling bold and I want to trade a $100,000 position. My broker has a 2% margin requirement, which means,
Yeah.
let me get my calculator out for this one.
You don't need a calculator. It's $2,000.
Right, $2,000. See, I can do math when I have to.
Of course. So that $2,000 would be your required margin. It's like a deposit to show the broker you're good for it. And this is where Forex margin gets really interesting, especially compared to how margin works in the stock market.
Yeah, that's something I've always been a little fuzzy on.
It trips a lot of people up. Because in the stock market, when you use margin, you're essentially borrowing money from your broker, right? It's a
Right.
loan.
Right.
But in Forex, the margin you put up is still your money. It acts more like a security deposit because you're trading contracts, not actually buying and owning the currency itself.
Okay, now that you mention it, I do remember reading that in the Baby Pips article. So it's more like, I don't know, putting a deposit down on a rental car or something.
Exactly. It's still your money, but it's held as collateral just in case something goes wrong.
Okay, that analogy makes perfect sense. It's clicking now.
Yeah.
But all this talk about collateral and just in case, it kind of highlights the whole risk factor, doesn't it? Like, if I'm new to all this, just starting to explore the world of Forex, I gotta be extra careful, Rail, because Forex can be a wild ride.
You said it. Think about it. You're new to the game, excited about the possibilities. You hear about this thing called leverage, and suddenly you're picturing yourself turning $100 into $1 million overnight.
Hey, we've all been there.
Right. And that's where things can get a little
Wow.
risky. Let's say you crank that leverage up to the max without really knowing what you're doing. You're hoping to catch a big wave, but in Forex, the market can turn against you pretty quickly. And when that happens,
Let me guess. That leverage that seemed so great at first suddenly backfires.
big time. Instead of riding that wave, you get slammed by it. All those potential profits you were dreaming of, yeah, they can quickly turn into losses.
And those losses get magnified because of that high leverage, right?
Exactly. That's the double-edged sword of leverage.
Okay, so what's the lesson here? What do people who are new to Forex really need to understand about margin and leverage?
Simple. They're incredibly powerful tools. But you wouldn't hand someone a chainsaw without explaining how to use it safely.
Right, definitely not.
It's the same with margin and leverage. Before you even think about what leverage ratio to use, you got to master the basics of Forex trading. Understand how the market works, learn how to manage risk, and most importantly, have a solid trading strategy.
So it's not just about knowing the technical stuff, it's about knowing yourself as a trader too.
100%. You got to know your risk tolerance. How much are you comfortable potentially losing? Because let's be real, Forex can be unpredictable.
That's for sure. So
Yeah.
basically, don't get in over your head, especially early on.
Exactly. Start slow, learn the ropes. And hey, that's why we love resources like Baby Pips. They break it all down in a way that makes sense, even if you're brand new to this.
Yeah, they're lifesavers.
Right, no jargon, just clear explanations and practical advice.
So folks, if you haven't already, definitely check out their full article on margin and leverage. It's well worth your time. It's like having a Forex guru on speed dial.
Couldn't have said it better myself.
All right, well, on that note, I think we've successfully navigated the sometimes treacherous but always fascinating world of margin and leverage.
We made it out alive.
Barely. But
Yeah.
hey, that's what makes these deep dives so much fun, right?
Absolutely. Keeps things interesting.
It definitely does. So as always, folks, thanks for joining us for another deep dive into the world of Forex. And remember, knowledge is power, especially when it comes to trading. Until next time, happy trading, everybody.